Hey team, I want to walk you through Technical Analysis 101. What in the world is this? It's essentially chart reading, but I want to break it down to its most essential and most basic forms so that anybody can understand it. This is a stock chart. It shows the history of the stock moving and the stock price. If we hover over anything, it will tell us the date and the price. So you can see here, this says February 18th, August 2017, and it gives us a price on the right-hand side, or probably your left, of $245. So in 2017 in August, it was trading at $245. So we can see the price over the lifetime of this stock. Now, what I'm looking at here is a daily chart. Why is it called that? Well, because number one, it has the daily set to days. But what does that mean? It means that each candle, each one of these little things you see here represents 1 day of trading action. So what does that mean? Well, that means that on this day right here, February 2nd, 2024, the market opened down here and closed up here. So the market went up. If you see a red candle, then it opened here and closed down. So this shows us not only the price action over the last so many years, we can see here back to 2015, but it also shows us what happened every single day because we have it set at a daily chart. We're looking at SPY, which is the S&P 500. Now, I do not want to overcomplicate this because it actually is more simple than most people realize, but reading a stock chart is all about understanding the trend. Where is it trending? Now, here's the rule book to know. If the highs are getting higher and the lows are getting higher, you're in an uptrend. If the highs are getting lower and the lows are getting lower too, you're in a downtrend. If the highs and the lows are staying the same, you're in a neutral market. And I will lay out what strategies work best after I show you how to draw this. Well, the way we look at this is quite simple. You can see here that the stock is reaching a new high. Okay, so this is a high. Where's my last high? Well, the last high it topped out here. Where did it top out before that? Here. Wonderful. Highs are getting higher. First half of an uptrend confirmed. All right, where's my next low? Well, we can say this was a low. Where was the low before that? We can say this was the low. Where was the low before that? We can say here or here. Either way, our lows are getting higher. So based on that, what type of trend are we in? We are in an uptrend. Once we see that our highs are getting higher and our lows are getting higher too, we draw a line from the bottom. Uptrends always draw a line from the bottom. So you can see here, we draw a line connecting all of the bottoms. Nice little bobs we line up. And so you can see here, bottom, bottom, bottom. And that is what defines an uptrend. Why did we draw a line? We drew a line not only for us to remember that we're in an uptrend, but also for us to know where the uptrend will break. When this line breaks, when the stock goes below this line, we are now entering the opposite side or a downtrend. Let's look at the same thing, but for a downtrend. So if we look at this, we can see the highs are getting lower and the lows are getting lower too. This is a downtrend. Once we know we're in a downtrend, once we see 1, 2 highs getting lower, 1, 2 lows getting lower, then we connect the highs. When we're doing downtrend, we connect the highs just like this. What do we see here? We see that we had a downtrend forming. Why? Because we saw this low and this low got lower. This high and this high got lower. This low and this low got lower. Then we connected the tops, and these tops connected, then predicted this top, then showed us where the market reversed. You can see here why we draw the trend lines is to, number one, remember what the trend is. And number two is to understand where it will reverse. So we can see here the trend changed. So the trend broke this trend line. It broke through it and actually at a good pace. That shows that, hey, we're reversing into an uptrend. We saw it break this. Now what do? We go, hey, look, this high is higher than that high. And hey, look, this low is higher than that low. Uptrend. Draw the new line. And now we have an uptrend until this line is broken. Now, what does uptrend and downtrend mean? It just means and shows where the market is going. The trend tends to continue until it breaks. And now we know where it's going to break. So once we know uptrend or downtrend or neutral, then we know what strategies to do. Strategies and an uptrending market would be selling puts. selling 112s, selling 111s, selling skewed shingles to the upside, buying stock, buying calls. Things like that is what's going to be your uptrending strategies. Also things like triangle breakouts, things like MACD breaks, different things like that is what you're looking for. For downtrending markets, selling calls, selling call credit spreads. We're going to be buying puts. We're going to be getting out of our our long stock, right? We don't want to be in long stock if the market's trending down. We also have things like breakout trades, RSI sell-off trades. If we're in a neutral market where the highs and lows are staying the same, we have strangles. We have very far out of the money puts and calls on different occasions, which is also a strangle. And what we have is we can create credit spreads on both sides, also known as an iron condor. But if we're talking about indicator strategies, we're talking about MACD divergence plays, RSI divergence plays. Those are the two things that work, but only in range-bound markets when the highs and the lows are the same. So that's all I really want to show you because that's all that matters. Look at the chart, zoom way out. Look, what is the current trend? Where am I breaking? And now I know what strategy to do. If my trend changes, I get out of my trades that aren't in that direction and I open trades that are going to benefit from the reverse trend. So that's how simple tactical analysis is. I know you've heard a lot of things before. I'm going to dive in a bit more about candlesticks and candle patterns in the next video, but that's how you read a stock chart and that's how simple it is.